Hello and good afternoon to everyone that is currently tuning live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Trent. With me here today is David proprietary trader from Iceberg at Sdn Bhd. How are you today, David?
I am good, Trent.
Okay, good to hear that. Welcome back. So in this podcast, we will talk about the trading themes for this week and also share how traders can position themselves for the week. So I would like the help of all our beloved audience today to share this video to all your friends. The more people that are watching this video, the more we are motivated to deliver greater content to all of you. Okay, so without further ado, let's jump into our topic for today. So we will be discussing on the topic, capturing opportunities in the rubber market. If you have any question, you can message in the comment box below. Okay, so the worldwide consumption for natural rubber has increased steadily in recent decades, and the Asian story continues to drive demand for the raw material. The volatility of rubber prices has remained high in recent years due to imbalances in supply and demand caused by rubber's unique planting and harvesting cycle, changing weather patterns, and a constantly evolving consumption trend. So, David, what is the size of the global natural rubber market and what are the key growth factors of the market?
Yeah, I think rubber as a commodity has actually been performing very well, especially along with other commodities. If you look at to palm oil as well as other greens market, I think rubber is no exception. It has actually rallied to a very good levels. So I think when you look into rubber market specifically, there's always two distinct categories. One you always refer to as a natural rubber market, and as well as another synthetic rubber. Which usually derive some of its components from the petrochemical side. So if you just look at some of the latest numbers by ANPRC, which usually collects data on the natural rubber market, I think production has been holding around the 13 to 13.5 million mark. Demand side is also pretty much similar in terms of total demand. So the rubber market as a whole has been seeing stagnant growth for the past many years. I think last year it was bad because we had a COVID onset pandemic early part of last year. But I think that scenario has changed. Towards the third and fourth quarter, we are seeing stronger demand. I think that really lifted prices higher. So, but if you look at in terms of totality, natural rubber market has been very stagnant in terms of their demand as well, and as well as the supply side as well.
Okay, so it seems that investors have to be more cautious on the current condition of the rubber market. Okay, so for our next question, what are the main usages of natural rubber and which country has the highest consumption of natural rubber?
Yeah, okay. When it comes to natural rubber, now natural rubber is mainly used as like a raw product for across many of the products. So obviously, when it comes to household item, the number one key thing is always comes to your mind when it comes to rubber is obviously your car tires. Then off late with the current pandemic that we're sitting in, medical growth is also using part of to a certain extent natural rubber plus synthetic rubber. So I think rubber plays a very crucial role in terms of our household items. So definitely, I think the number one key item for the main demand for natural rubber is always in the manufacturing and automotive parts, especially for vehicle. And if you look at some of the key demand drivers, China is always a leader in this category. So the funny thing about China is that China being the largest country that demands a lot of rubber, they actually produce rubber to a certain extent, especially if you look into southern parts of China, like the Hainan area, you have a lot of rubber producers. So as long as any countries that's probably between the staying around the equator, like countries like Malaysia, like us, as well as our neighboring countries, they can plant rubber. As you go further up 6 degrees above the equator, those are the areas that can actually plant rubber. So China, to the southern part of China, they does produce rubber. But the problem is, China itself only produces probably about 800,000 tons annually, but they need about roughly 5 to 6 million tons of rubber. I think that's a very big figure. So they definitely have to be a very big importer. So China demand is number one in the world. So if you want to look at where fundamental driver is, we have to look at China. So coming second place after China would definitely be India, another big consumer country. So it's similar story with India as well. They are a very large consumer base, but they also do plant rubber. They do have some rubber estates in India as well. But again, this production is not sufficient to meet their overall domestic demand. So therefore, there's always a need for China and India to be demanding more rubber. So China and India is always the largest market in terms of demand. And when it comes to other countries, they couldn't compete with China and India. Obviously, of late, we are seeing countries like US and Europe starting to adopt more natural rubber market, but those numbers are actually quite insignificant. So still boils down to China and India being the largest consumer of natural rubber.
Yes, China certainly has a large demand for natural rubber based on its huge economic size. Okay, so for our next question, right, from your point of view, what are the key factors affecting the prices of natural rubber in recent months?
Oh, that's a very good question. I think there's multitude of factors. Obviously, rubber did right along the story, or rather the common narrative in the commodities market. Of course, we're seeing rallies in across all commodity spaces, be it in grains, be it in precious metal, even in energy, crude oil. We're seeing levels touching above the 70 mark on WTI. So obviously, I think rubber is no exception. We are seeing, as economy starts to recover, for the first part being China. The economy started to recover second half of last year. So if you look back into your rubber charts, it's also signaling the same point where China economy starts to recover, you start to see pick up in prices. So obviously, I think what really drive rally in prices for the past couple of months was mainly due to China's economy starting to rebound. In fact, it's not only China; the world economy is starting to rebound. Look at some of the numbers from IMF or even some of the World Bank numbers. They are showing that this year probably will be recovering to pre-COVID levels in terms of growth trajectory. So all this is showing you that the economy is recovering. They need the demand of natural rubber. So that's actually causing prices to rally. So GDP growth is an important factor. So if you look at China, I think they probably registered quarter to quarter almost 20% gain. So that's quite huge. So as long as China continue to grow, as well as other parts of the economy, world economy starts to grow, I think the demand of rubber will always be sustainable. Now, secondly, also as I highlighted earlier, the main demand for natural rubber is always into tire making. So if you look into automotive numbers, especially vehicle sales, both China and US recorded tremendous numbers, especially in China. So I think the first, if I'm not mistaken, the first 3 months this year, 2021, in China, they recorded, I think, year-on-year basis, they recorded almost 80% increase. Obviously, last year, the same quarter, they probably were hit by the pandemic. So you can argue it's coming from a low base, but those numbers are actually very good. So it goes to show that China car passenger sales is actually starting to climb up. And I think if I get the figures correct, it's probably going to reach about 5 million easily for the first quarter. That's a very good amount. So obviously with higher vehicle sales, with more participation, more people buying new cars, and people start to travel around interstates, be it in China and US, definitely there's going to be demand for rubber going forward. So I think this also boils down to it also in a way be something of a price support in the market. So thirdly, I think late last year we witnessed a bit of weather extremities, especially around key rubber producing countries, especially Thailand. So there's whenever we have adverse weather conditions, especially floods or heavy rain, it's going to disrupt harvesting pattern. So that actually also explains why prices also tend to rally, especially when come into 2021. So weather is definitely going to affect supply. Right now, supply is still slightly a bit tight. If you look at stocks levels in Shanghai, especially the Qingdao stock levels, those levels are still pretty low. So it goes to show, I think, with supply being very tight, demand is still very sustainable, prices will just have to adjust upwards. And finally, I think crude oil price is also another beneficial factor. We have seen a strong rally in crude oil price, especially WTI from the low last year were negative. Now we are looking into 70s, almost back to pre-COVID levels. So it all boils down, it all supports the notion of higher rubber prices as well, because when you have high price, synthetic rubber materials which derive its component from petrol, it's going to be cost a little bit more expensive. So there will be a tendency to shift away from synthetic rubber to natural rubber, and that also helps in a way to lift up natural rubber prices.
Okay, so investors should look out for the trading opportunities in the rubber market based on the factors that David mentioned just now. Okay, so to our audience who are interested to trade rubber, you can actually trade the SGX Seacom rubber futures with Phillip Futures. Also, now you can open a futures trading account with Phillip Futures entirely online with in the comfort of your own home. No more hassle of coming to our office or any documents courier. All you have to do is just go to our website at www.phillipfutures.com.my and look for the online account opening banner on the main page. For more details, you can drop us a message on Facebook and our representative will get back to you. Okay, lastly, before we end the podcast for today, one last question for you, David. What are the benefits of trading this SGX Seacom rubber futures?
Yeah. Now, if you look into the global benchmark for rubber pricing, we always look into the SGX Seacom TSR20 as a benchmark. Just drawing another parallel example, if you want to look into a benchmark of global palm oil price, you look into the BMD, Bursa Malaysia Relative Palm Oil Price. So same goes when you look into the rubber market, you always refer the TSR20 on the SGX Seacom market as the global benchmark leader in terms of pricing. There's a couple reasons to it. You look at some of the big rubber consumers like the tire manufacturers, they always look into SGX Seacom rubber because that's the gateway to pretty much you will pretty much lead to other prices in other regions as well. And I think if you look at SGX Seacom, it's actually geographically it's actually located into very prime, I would say prime consumer locality. So in a way that they really look into SGX as a way to determine the market price. And obviously, you look at the SGX Seacom rubber is also denominated in US dollar. We do have other rubbers in other exchanges, but usually they're denominated in their local currencies. So whenever you are denominated in US dollars, it shows that it's much more preferred, especially you are doing an international trade. So I think with that in mind, you definitely have the geographical reach and you have a contract that's traded on an international currency. And to top it off, if you look into some of the SGX Seacom rubber, you have a lot of derivatives. You can even go to the options market. They do have an options market, which actually provide you ample risk management opportunity, as well as you can enhance your risk management profile by using options as well.
Okay, yes, SGX Seacom rubber futures is certainly a good product for investors who wish to trade the rubber market. Okay, so and now we have come to an end for today's podcast. If you have any questions or any topics you want us to discuss next week, you can message us in the comment box below. So thank you for listening to our podcast and happy trading for the week. Thank you for your time too, David.
Thank you, Trent. Take care.
Okay, see you. Bye.
Bye.